Hey, in this video, I'm going to walk you through the process of acquiring an auto repair shop with an SBA loan. I'm going to be using a real client that we worked with as an example, kind of anonymize the information here, but really walking you through step by step. So the different steps that I'm going to be walking through are really how to determine what the right price is or how much you'd actually be able to qualify for in terms of an SBA loan, then how to find a lender that would be a good fit for you, how to then get a term sheet from that lender, getting the deal, getting the buyer to agree to the terms of the letter of intent and kind of locking down that deal. Then going through the underwriting process by providing your projections and business plans. So I'm going to be showing you examples of projections and business plans for what you would need for a auto repair shop acquisition deal. And then kind of ultimately just talking through what that process of once you get in a final approval, what does it look like to actually get to the closing table and how long might that take? So that's kind of the roadmap here. I'm going to kind of take you through step by step. I've got a lot of free tools and resources along the way that I'll be sharing links to in the description of the video below here. So hopefully that'll be helpful for you as we go. And I guess just before I dive in, a little bit of my background. I was an SBA lender for 12 years, closed about 1,500 SBA loans. Now I own ProjectionHub, where we help folks create financial projections and business plans to help them through the SBA process particularly. So really excited about this kind of detailed series where we're going to be looking at different types of industries. And so today looking at an auto repair shop. So, all right, with that, what I've done here is pulled up our acquisition projection template. And again, we'll link to this template in the description of the video below. But really the first step I go through whenever working with a potential buyer is to get the seller's financials into this model so we can start to look at the numbers and see what is possible in terms of an SBA loan. So the things that you're going to need to think about from an SBA lender perspective is this green highlighted row right here, debt service coverage ratio. So for any acquisition deal, an SBA lender is going to need to demonstrate that the deal, that the business can cash flow the proposed loan. And the way they measure that is based on debt service coverage ratio. And so they want that to be 1.25 or above typically, which means there needs to be $1.25 of earnings or cash flow for every dollar of debt service or loan payments. And so in the projections, we need to be able to show that you're going to have 1.25 or above on the debt service coverage ratio, but you also need to show that historically. So it's not just projection based. The first step is really going to be, has it cash flowed historically? That's what an SBA lender is going to be looking at. So let me show you what we do to determine that. So the first thing we do is get all of the details from the tax returns, the historical tax returns, into this model here. So we've got our revenue and our expenses broken down here. And then we have add backs. So add backs are a negotiation. The seller may have certain add backs that they think should be added back to determine what is that seller's discretionary earnings or the cash flow available to support the debt. And the lender, your SBA lender, may have a different opinion. So the seller may say, I want to add back what we spent on marketing. We tried this marketing campaign and it didn't work. And the lender may say, no, we're not going to let you add that back. So this is kind of a moving target of what gets considered and agreed upon as an add back. That's something you're going to be working with your lender on. But ultimately we get to this kind of seller's discretionary earnings number. And in this case, what you'll see is that there's a big dip here in the last tax year. So it went from 180,000 of earnings down to 43, which is a challenge. And we see this all the time with acquisition deals. This is basically what happens here is you can see it in the numbers. The seller decided they wanted to sell the business and they checked out. They gave up, they slowed down, and earnings, tanked. And so that makes it really hard to buy the business, but there's still some work that we can do to try to demonstrate that the business is still worth something and that it's still worth buying. So what we did in this situation is we were looking to get to this prior year theoretical debt service coverage ratio. We wanted each of the last 3 years to hit a 1.15 or above. Now, typically lenders want 1.25 as a minimum. 1.15 is like the real bottom of the barrel. Like that's the minimum. You're not going to be able to acquire a business for less than this if your debt service coverage ratio is less than 1.15, unless there's a really unique situation. So we were trying to figure out, how do we size this deal? And had to play around with the loan amounts until we got to exactly this 1.15. So we had these various add backs. Now, in this case, the owner, the current buy owner or the seller owns the building. And so the buyer is going to have to pay rent. Now, in the historical financials, there was no rent expense because the business itself owned the building. And so they were paying the mortgage if there was a mortgage on the building, but they weren't paying rent. And so we had to account for that hey, the buyer here is going to be paying $3,000 a month, it's $36,000 a year for rent. So this is like a negative add back. So it reduced the seller's discretionary earnings. So once we took that into consideration, this deal only had $43,000 of cash flow available for debt service. And the proposed annual debt service was $38,000. And that was based on an SBA 7A loan here of $250,000 and then a seller note of $125,000. And we had to put the seller note on standby for the first 2 years. So you can see on the seller note, the first payment doesn't happen until 2 years post-acquisition. And that was in order to be able to get the deal to cash flow. It didn't cash flow if you weren't waiting that 2 years. So $250,000 on a 9% interest rate on a 10-year term, that was the max deal that we could get here. So that was the exercise we have to go through and kind of play around with the numbers until we could get cash flow to work. And that ultimately determined the price. Now, the buyer had already made an offer to the seller at a higher price. But once we got into it and we started analyzing the data, we're like, that's not going to work. The lender, we're not going to be able to find a lender that will approve that. And so that kind of gets me into my next point of how to find a lender that's going to be willing to approve your deal. So we've put together this free SBA lender finder tool. We'll put a link to this in the description of the video below as well. This is a really cool tool. It takes the publicly available SBA loan data over the last 5 or so years. We update this on somewhat regular basis. And what you can do is sort by state and business age. Now, business age is what we want to do in this case because change of ownership is an acquisition. So that means change of ownership in this case means acquisition. So we want to select only, and we're going to see which lenders do the most acquisition deals. Okay, so Live Oak Banking Company over the time period has done by far the most acquisition deals. And then you can kind of go down the list and see who else is on the list here. Then you can also sort by location. So I also like to do that. So let's say this deal is in Florida. So you can sort by Florida and see if anything changes. Live Oak Bank's still at the top of the list here. You can also sort by industry. The industry is kind of high level and vague. So I don't have it broken down specifically to auto repair shop industry, but you might be able to pick a couple of these that you think are maybe similar. So let's pick other services, maybe professional services, technical services, maybe transportation. We'll go with that to start. And so again, it resorts the data every time, but Live Oak Bank still top of the list here. And so then your next step is to try to contact a lender. If you don't have a lender or don't know how to contact a lender, you can click this button here. We'll be able to offer our free SBA review. So I've got this free SBA review. You give me a little bit of information about your deal here, and I'll give you some free feedback. And I can also connect you with a lender who I think maybe would be a good fit based on the information that you provide. And then the goal there is ultimately to get the lender to provide you what's called a term sheet. The term sheet is going to outline, hey, we've looked at the numbers. So basically it's going through this process, right? And this is what I did with this client and the lender. I was on the phone with the lender and kind of working through and negotiating, saying, hey, can we count this personal vehicle insurance as an add back? Okay, sure. So we put that in there. Okay, hey, that's great. That got us to our 1.15 that we needed. So it's a little bit of a back and forth, ultimately to be able to say, okay, we can get comfortable with a $250,000 loan. And so then they put together a term sheet that outlined that loan amount and the terms of that. At that point, once you have a term sheet, that's kind of when you're probably going to have to go back, in this case, go back to the seller and say, okay, this is what I can get approved, or this is what we think we can get approved by the bank. hey, that might be a little bit different than what we initially had proposed to you, seller. And so can we adjust the letter of intent or really agree on a final structure? So you're now looking to kind of lock in and agree on that final structure with the seller. At that point, you're probably going to be paying a good faith deposit to the lender to go into underwriting. So a lot of banks will charge you a fee to start working on your deal and go through the underwriting process. Underwriting is where they're going to beat up the deal, ask you a bunch of questions. They're going to be looking at your financial projections. They're going to be looking at your business plan, which brings me to the projections and business plan piece. That's something that we can certainly help with too. In this case, we helped with this client's projections and business plan. And this was actually an interesting case. So what we said is, let's just assume this business doesn't grow at all. So we assume no revenue increase, but what we could tell is that this business, the seller, hadn't raised prices in a long time. And so their margins were really below industry standard. And so we could start playing around with this and say, okay, their historical labor cost and material cost. So this was their material cost as a percentage of revenue historically was 48.71%. We could do some research and we'd say, hey, historically or typically in this industry, maybe it's 40% is typical. And so we could change this to say, hey, this is going to be 40% going forward and, see what that does. If you got your margins in line with the industry standard, wow, this debt service coverage ratio looks way better now. And so there was a little bit of back and forth with the lender on that. What we ultimately decided to do is just say, we wanted to show that this deal could work, even if things stayed the same, even if they couldn't improve the margins. We wanted to show that even if these cost of goods sold stayed the same as it was previously, and a lot of these different expenses just stayed the same as a percentage of revenue, that we can still cash flow the deal. And so we built in assumptions for how much the buyer was going to be able to pay themselves. So here's the new compensation of officers for the new buyer, $52,000, a rent expense as well that we talked about. So we get those all built into the projections, and ultimately, again, making sure that this hits that 1.25 or above cash flow level. And then we also help put together a business plan. So this is just an example. We have a free acquisition business plan template that is available. We'll put a link in the description of the video below again to that. I'm not going to show you the specific business plan that we put together for this auto repair shop, just because I don't want to dox the buyer and the seller. But I'm going to show you this as an example of what is included in an acquisition business plan. We're really talking about, I guess the overarching perspective here is we're trying to say, hey, we have a business here that's been operating, it's been working, it's been cash flowing. And here I am as a buyer, here's my experience, and here's how I'm not going to screw it up. It's already been working. Here's how we're not going to screw it up. And trying to convince a lender of that. It's not a new startup business plan. It's about, we already know there's a market. We already know there's a business that's working. We know there's staff that work. And so how will I be able to continue that? And what trends do I see playing in my favor? And what's my strategy to transition? So you'll see things here. We start with kind of just the executive summary. We have this acquisition strategy and rationale section. We have a transition plan section, which is really important, and so on. The way I like to think about this is it's about the person, who's the buyer. It's about the business itself. What's its history been? And what's that transition plan, and do the financials work? That's what you're trying to deliver and get across in the business plan. So you can kind of see an example here of what we put into an acquisition plan. We're putting in images and graphics to be able to show the market. We're showing market trend analysis in terms of search volume on Google, for example. We have a SWOT analysis, strategy and rationale for why we're doing the acquisition, what synergies and integration benefits we think we're going to have once we acquire the business, how we justify the purchase price, what's our funding strategy, what kind of working capital requirements are we going to have, what's the risks, and how are we going to mitigate those risks, deal structure, timeline, what the seller is going to be, if the seller is going to stick around and help with the transition. We put that into the business plan as well. You can see there's a lot here. So, but that's the high level one I wanted to show. So you're going to need to work on your projections in your business plan and then submit to underwriting. Underwriting is going to beat up the deal and hopefully give you a final approval. Once you get to that final approval, then you're in the closing and closing process. That's where the attorneys get involved and get, fighting back and forth from the buyer, the seller, and the bank are all involved in that process. And then ultimately, it's just a paperwork process to get to the finish line of buying that business. So that is kind of at a high level, the different details in the process that you're going to need to go through. We're happy to help review any deal, kind of any stage of the process that you're in. We offer that free SBA review, which again, we'll put a link to that in the description of the video below. So you can give me a little bit of context. I can give you some feedback on what I think about the deal, what I think the pricing might look like. Yeah, give you that free feedback based on my 12 years of experience as an SBA lender, and also through my experience helping a lot of folks with the projections, business plan, and all of that. So reach out to us at support@ProjectionHub.com if you have any questions. And if you found this video to be helpful, it'd be awesome if you were to like the video and then subscribe to our channel, because we put out a lot of content related to acquisitions and using SBA loans, financial modeling, business planning, all of that stuff that you're going to need in the process. So I'd love for you to hit that subscribe button so that you can follow along with our other content. All right, thanks.